Well, folks, buckle up because today we're diving headfirst into the clown show that is the US economy in 2025, and boy, do we have a juicy one for you. Federal Reserve Chair Jerome Powell, our man in the hot seat, has just dropped a bombshell at the International Monetary Fund meeting, pleading with the world's finance chiefs to keep politics out of central banking. And why, you ask? Because the Fed is apparently the last bastion of sanity in a world where economic policy is starting to resemble a reality TV show. But here at Boss Economics World, we're not buying the hero act. Oh no, we're here to peel back the layers of this economic onion, and trust me, it's gonna make you cry, either from laughter or despair, your choice. Now, for those of you tuning in, whether you're a regular Joe worried about your shrinking paycheck or a Wall Street suit sweating over your portfolio, this episode is for you. We're breaking down the economic mess reflected in Powell's impassioned speech, exposing the government's role in driving us into a ditch, and serving up the spiciest data to back it all up. So, grab your popcorn, folks, because it's time to roast the system, Boss Economics style. Let's start with the headline act, Powell's melodramatic defense of central bank independence. According to insiders at the IMF meeting on April 25, 2025, Powell basically begged global finance chiefs to keep politics out of monetary policy, claiming it's the only way to keep inflation stable and employment high. And the audience? They gave him a standing ovation. Oh, how noble, how heroic. But hold your applause, people, because here at Boss Economics World, we see through the smoke and mirrors. First off, let's talk about the elephant in the room, President Donald Trump's latest tantrum. Just days before Powell's speech, Trump took to social media, his favorite soapbox, and called Powell a major loser, demanding the Fed slash interest rates. This isn't new, folks. Trump's been bullying the Fed since his first term, and now in 2025, he's back at it, musing publicly about firing Powell. Wall Street, predictably, had a meltdown, with the Dow dropping 800 points in a single day on April 22, 2025, as investors fretted over the Fed's independence. And sure, Trump later backtracked, saying he wouldn't fire Powell, but the damage was done. Now, Powell's out there playing the martyr, insisting the Fed is above politics. He even said on April 16, 2025, at the Economic Club of Chicago, "We're never going to be influenced by any political pressure." Oh, really, Jerry? Then why does it feel like the Fed's every move is a reaction to political chaos? Let's not kid ourselves, central bank independence is a myth when the government's economic mismanagement creates a pressure cooker that forces the Fed's hand. And who's to blame for that? Spoiler alert, it's not just Trump. It's decades of bipartisan incompetence in Washington, D.C. Here's where we zoom out from the Powell-Trump drama to see the bigger picture. The Fed's so-called independence is being tested because the government has turned the economy into a dumpster fire. And Exhibit A. Trump's tariff policy, which Powell himself hinted at during the IMF meeting. You see, folks, Trump's been slapping tariffs left and right, most recently a 25% tariff on European goods announced in March 2025, claiming it's all about protecting American jobs. But let's call it what it is, economic vandalism. According to the U.S. Chamber of Commerce, these tariffs have already cost American consumers $125 billion annually in higher prices as of Q1 2025. That's right, folks, your grocery bill, your car payments, your Netflix subscription, everything's getting pricier because of this tariff madness. And guess what? The inflation rate, which the Fed is supposed to keep under control, is now sitting at a stubborn 4.8% as of April 2025, according to the Bureau of Labor Statistics. That's more than double the Fed's 2% target. No wonder Powell's sweating bullets, he's stuck trying to mop up the mess while Trump keeps pouring gasoline on the fire. But it's not just Trump. Let's not forget the Democrats' role in this circus. Remember the $3 trillion green infrastructure bill passed in 2023? Yeah, the one that was supposed to save the planet but ended up funneling billions into corporate handouts and inefficient projects. According to a 2025 report by the Congressional Budget Office, that bill added 1.5% to the federal deficit to GDP ratio, pushing it to a staggering 115%. Translation: the government's borrowing like a drunk sailor, and the Fed's left holding the bag, trying to keep interest rates from spiking and tanking the economy. Now, let's get to the juicy part, the recession red flags. Folks, if you think the economy's doing fine, I've got a bridge to sell you. The data is screaming that we're on the brink of a serious downturn, and the government's mismanagement is the main culprit. Let's break it down, Boss Economics style, with the latest numbers to back it up. First, unemployment. The official unemployment rate might be sitting at 4.2% as of April 2025, but dig into the U6 rate, the real measure of underemployment, and it's a whopping 9.1%, according to the BLS. That means millions of Americans are stuck in part-time gigs, barely scraping by, while the government pats itself on the back for job creation. And why is this happening? Because businesses are scared stiff. The National Federation of Independent Business reported in March 2025 that small business confidence is at its lowest level since the 2020 pandemic, thanks to, you guessed it, tariffs, inflation, and political uncertainty. Second, consumer spending. You know, the thing that makes up 70% of the U.S. economy? It's tanking. Retail sales dropped 1.3% in March 2025, according to the U.S. Census Bureau, and consumer confidence is at its lowest since 2022, per the Conference Board. Why? Because Americans are getting squeezed by inflation, higher borrowing costs, and stagnant wages. Real wage growth, adjusted for inflation, has been negative for 18 months straight, according to the Economic Policy Institute. That's right, folks, your paycheck buys less today than it did 2 years ago, and the government's brilliant solution is, more tariffs and more spending. Third, the housing market. Oh boy, this one's a doozy. Mortgage rates are hovering at 7.5% as of April 2025, thanks to the Fed's refusal to cut rates amid persistent inflation. Home sales have plummeted 25% year over year, according to the National Association of Realtors, and housing starts are at their lowest since 2019. So, if you're a millennial trying to buy your first home, good luck, you're stuck renting from BlackRock, which now owns half the starter homes in America, according to a 2025 Bloomberg report. And here's the kicker, the Fed's hands are tied. Powell's made it clear they're holding rates steady at their May 6 to 7, 2025, meeting, marking the third consecutive pause. Why? Because cutting rates now would risk runaway inflation, especially with Trump's tariffs jacking up prices. But keeping rates high is crushing consumers and businesses, pushing us closer to recession. It's a classic catch-22, and guess who put us here? That's right, decades of government mismanagement, from both parties, leaving the Fed to clean up the mess. Now, let's zoom out even further, because this isn't just America's problem, it's a global one. Powell's plea at the IMF wasn't just about Trump, it was a warning to the world. And for good reason. Look at Europe, where the European Central Bank is grappling with a 5.2% inflation rate as of April 2025, thanks in part to Trump's tariffs on their exports. Or take China, where GDP growth has slowed to 3.8%, its lowest in decades, partly because of U.S. trade policies, according to the World Bank. And let's not forget the IMF's latest warning. In its April 2025 World Economic Outlook, the IMF slashed its global growth forecast to 2.4%, citing policy uncertainty as a key driver. Translation: governments around the world, not just in the US, are screwing things up, and central banks are left holding the bag. But here's the thing, folks, central banks aren't innocent either. The Fed's own policies, like keeping rates near zero for a decade after 2008, helped inflate asset bubbles that are now popping, from tech stocks to crypto. So, while Powell's out there begging for independence, maybe he should take a hard look in the mirror. So, what's the takeaway from this economic clown show? It's simple, the Fed's independence is under threat not because of Trump's tweets, but because decades of government mismanagement have turned the economy into a house of cards. Tariffs, deficit spending, corporate handouts, you name it, Washington's done it, and now we're all paying the price. The Fed's stuck between a rock and a hard place, and no amount of impassioned speeches at the IMF is going to fix that. Here at Boss Economics World, we're not here to sugarcoat it. The data is clear, recession red flags are flashing, consumers are tapped out, businesses are terrified, and the global economy is teetering on the edge. And the solution? It's not more tariffs, more spending, or more political meddling in the federal. It's time for the government to get its act together, cut the nonsense, and let the economy breathe. But hey, don't hold your breath, clowns don't change their stripes, and Washington's circus is here to stay. Until next time, folks, keep your wallets tight and your eyes open, because in this economy, the only thing you can trust is Boss Economics World to tell it like it is. Smash that like button, hit subscribe, and share this video with everyone you know, because if we don't call out the clowns, who will?